This stock will surprise everyone. They just shocked the market with a very positive earnings. This isn't financial advice, but some analysts would say it's a good idea to buy $50 of this before November 10th. So this week is make or break for Carpenter, ticker symbol CRS. They're a steel and alloy supplier. There's a great demand for steel, given that it's extremely important and widely used for power generation materials. Defense spending is also increasing. That takes a lot of steel. And it's also used for medical devices, which Carpenter does provide steel for that, as well as for facilities like you would expect steel to be used for. So it's a cyclical market, but right now risk is on and the earnings are solid. So as far as a 1 to 3 month idea, CRS is the ticker. This isn't financial advice, but let's jump into a little bit about this company.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is CRS. These are the trends: electrification, manufacturing, increased defense spending, and here, record demand for power generation materials and increased electrification. So that includes electric vehicles. I don't know exactly if that's totally checks out, but it certainly sounds like something electrically related is going to use a lot of metal materials. So we'll see. But this Saudi resource seems to think that that's the case. So I don't know, but they're definitely gung-ho about momentum for Carpenter. Now, this is the earnings reaction. And importantly, you can know nothing about this company and say, whoa, something is happening right here around $304, right? That's where this first candle closed. That's where it touched again. That's where it touched again. And now today we're having a good move. So as far as a level to risk off of, $304 has to be it. And on a 5-year chart, there's nothing, absolutely nothing, okay? We are in all-time highs, blue skies, and this could be a game-changing earnings. The earnings per share beat, and that reaction is significant. So let's get rid of this and say, what are some risks here? Well, these are their markets, right? Are they likely to all slow down at once? Probably not. Raw material costs, costs of nickel, cobalt, titanium. I don't know the futures for each of these, but if you were very all in on Carpenter, which I don't suggest that, but you could take a look at, I believe each of these have futures probably, just like, copper is HG. You can see the cost is going up a little, but not compared to previously. This was probably some sort of major world event. We don't have to go into that in detail because this setup is so clean. So it's low risk right now. And you can look at other steel companies. You can look at STLD, Steel Dynamics. As soon as this godforsaken, horrible piece of software loads, which is also the best software in the world, which is why I use it, but it still takes so there we go, long to load. Definitely some moves upward, but as for recent earnings reaction, kind of getting back to where that reaction happened. So hopefully it'll hold this moving average if Carpenter is to be a good idea. And then as far as other steel companies, well, there are other ones. It's not like the most exciting sector. A lot of these companies are slow moving. And if we look into basically, these are just some people on the board. They obviously have people from legitimate companies like Lenovo, IBM, and Danaher sounds familiar, but I'm not going to ball. It sounds like the glass company. This is not like the AI sector, right? No one is jumping up and down saying this is going to be the next $1 trillion company. But it does offer the lowest risk to reward right now. And if we look at some of these other companies, you know, these guys have their fingers in a lot of different verticals and also products. So they're pretty diversified. And I can't in good faith say, you know, buying NVIDIA is a good idea right now when you have earnings in a week, right? That's crazy. AMD, I can't say to go buy that, even though semis are strong, because the earnings reaction was, well, frankly, a little bit confusing so far. You know, maybe it's a good buy over this level, but in terms of earnings reactions right now, there are some other ones that are forming to get today. DOCN, Lemonade, just talked about that, but Carpenter is definitely in the conversation, even though it had earnings already, because it's holding up after that earnings. Whereas some of these earnings reactions have sold off, right? Microsoft, even Google, some profit taking, although this looks pretty strong today off of this 10-day moving average. And of course, Meta, which might be a good buy down here, actually, for people who are more comfortable buying dips. I'm not always a dip buyer, but if you look back, there's definitely, you know, some breakout potential that could happen again from some, you know, demand that caused it to break out here as well. So, you know, similar to if you saw this dip buying opportunity on the trade desk, you know, this doesn't look like much, but this is 20% from, you know, this dip down here. So it's not easy. I don't recommend it at all, actually. But some people who are very good at it, you know, this is United Healthcare that Warren Buffett bought, can get away with buying those dips. I really shouldn't have even mentioned it because I'm, you know, worried that people who are not advanced are going to start doing that. But yeah, that's basically the kind of thing that's working right now. That and earnings high volume closes, positive earnings. Breakouts are not really working. Here's one recently from LAES, semi breakout that is holding up. This is probably as good as a breakout I've seen hold up, but as you can see, it just looked like it was going to break out here, right? This is what was happening. And then, nope, faked out. Of course, that was the market crashing yesterday, which it doesn't look like much now. It got bought back up, but this was scary yesterday. If you were watching it at like 4 p.m., it's all the way back to Trump Chi times 2 weeks ago. So that's a lot of context, but that's why CRS is such a good buy, even when it's not the most exciting company in the world. If you like these ideas, hit that like button. If you want to get a free course on how to buy stocks before they go up, hit that subscribe. I put that on the YouTube posts once a month, so subscribers can get that. And if you want to make sure you continue getting access to these videos, even if YouTube comes out with some type of guideline violation, which it has to this channel within the last week, hit that first link. It's free.stockscommunity.com. You can go to that free community. And if you want to work one-on-one, go to stockscommunity.com. I'll see you in the next one, and I hope this helps. And by the way, the violation was not a big deal or anything. I just used a word I shouldn't have used. You know, it's very similar to the word wealthy.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.